Hello, everyone. GM. Welcome back to another episode of Overpriced JPEGs. I have a very special episode today. I am joined by Degentraland. Folks probably know Matt. You say your real name, right? People,
yeah.
You're not private about it. Matt, better known as Degentraland on Twitter. I feel like you have struck the perfect... You have like one Twitter because you have the perfect combination of just shit posts, like internet snark. You've got that voice nailed. And then interspersed with really thoughtful, awesome educational threads that give great insight into the news of the day and the space in general. So congratulations, sir. I tip my hat.
Thank you. Yeah, it's been a wild ride. I've been tweeting for about 6 months now. Wow. And about 2 weeks in, I realized how short the attention span of the NFT investor is. The only way to communicate with them is to do it in a digestible format, which tends to be shit posting.
You're exactly right. It is something that I think about probably not as regularly as I should, but I will at some point really decide I'm going to double down on Twitter and actually try and get good at it, which is something I have not really tried to do yet. And I will look to you for all my tips. All right. We are going to dive into so much good stuff here. I heard you recently on a Blockworks space. I thought you were just fantastic talking about macro environment, some big picture stuff, some small picture stuff. We'll talk about NFTs, your framework for them. I really want to get into Doodles. I think you and I maybe have differing opinions, but maybe we'll converge in the same place around what chain Doodles should land on. Otherside Meta, you have some awesome insights. You had a great thread about Otherside Meta. So, really, it's going to be a highlight reel today of all really interesting topics. But before we dive into all that, we do need to hear a word from our lovely sponsors.
COINSHIFT is a leading treasury management and infrastructure platform for DAOs and crypto businesses who need to manage their treasury operations. Every crypto org needs to manage their treasury, and COINSHIFT offers a simple, flexible, and efficient multi-chain treasury management platform built on top of the extremely secure Gnosis Safe. With COINSHIFT, your organization can go from primitive single-chain treasuries to expressive, flexible, multi-chain features such as global user management, global contracts, proposal management, and many other features that can be shared across an entire organization. COINSHIFT layers on powerful treasury management tools on top of the proven security of Gnosis Safe, allowing users to save time and reduce operational burdens and gas costs. COINSHIFT even has data tools like account reporting across the 7 chains on which it operates. Used by industry powerhouses such as Uniswap Grants, Balancer, Consensus, and Messari, COINSHIFT is speeding up the coordination and efficiency of the organizations that use it. In DeFi, you have to keep up with the frontier, and COINSHIFT makes that easy. So sign up at coinshift.xyz/bankless.
MetaMask is the leading Web3 wallet to get you access to everything you need in Web3. If you're just getting started on your NFT journey, you need MetaMask. And if you need to fund your MetaMask account in order to buy that NFT that you've been eyeing, well, now you can do that directly through MetaMask. Just click the blue buy button on the home screen. Personally, I'm mad that I've spent extra gas fees transferring money from Coinbase to MetaMask in order to buy NFTs. I've been using MetaMask directly, and it is so much better. You can also buy stable coins and native tokens from Ethereum, Polygon, Avalanche, CeeLo, and others, and you can do it directly with your debit card, your credit card, through Apple Pay or Google Pay. And there is now an improved buying experience on MetaMask Mobile. You'll only see tokens that are in your region, so it's personalized to you, and you'll get real-time quotes, so you know you're always getting the best deal. If you haven't downloaded MetaMask yet, what are you waiting for? Go try it out. You can learn more about buying cryptocurrencies with MetaMask at metamask.io/buy-crypto.
All right, we are back. Degentraland. Let's just start with where we are today. Crypto is pumping. We're recording this on July 28th. Crypto is pumping. NFT volume is down. Those two facts seem somewhat connected. We usually, when crypto is sort of volatile and moving, we tend to see lower NFT volume. What's the state of the market? Where are we? How are you assessing things?
Yeah, I think to understand the crypto market, you have to understand the wider market in general. Crypto prices are inextricably linked to the stock market, so the S&P 500 and the NASDAQ, albeit with a higher beta. So when the S&P and the NASDAQ drop 20%, you're going to see crypto coins, chains drop 60 to 70%. And then like yesterday, when we saw the NASDAQ go up 3 or 4%, Ethereum prices are now up 15 to 20%. So the question is, why is the market in such a bad place right now? What caused the downturn? And the question that everyone wants to know the answer to is, when are prices going to go back up? I think The answer rests in inflation. So inflation's the highest it's been in 40 years. It's at 9.1% right now. We have to look at it from both the demand side and the supply side. So from the demand side, we have a ton of excess liquidity in the market right now. So the US government injected a bunch of cash through Biden's stimulus plan. Everyone got $1,400 payments. And then we also are seeing low unemployment. It's 3.6% right now. So at the beginning of COVID, service industry collapsed. Waiters, hotel staff, they all lost their jobs. But tech companies were hiring like crazy, and consumer products, consumer goods were performing extremely well. So now we're in a situation where no one wants to work. Everyone's demanding higher wages, which of course drives up the price of inflation. From the supply side, the Fed thought that inflation was transitory because as the world opened back up, supply issues would be solved. But mandatory lockdowns in China crippled supply chains. You could look at the prices of chips, for instance, which have gone up tremendously, which flow into automobile prices, manufacturing costs, and commodity prices are up. They're through the roof because of war in Ukraine. Gas is at $5 a gallon in the US for the first time ever, and India banned wheat exports because of food insecurities. All of this is to say the Fed needs to raise interest rates in order to bring inflation down. And bringing it back to the crypto market, every NFT project, every crypto platform just trades like a mid-cap tech company whose valuations are determined by future cash flows. So when interest rates go up, those future cash flows look a lot less appealing, hence Ethereum down 70%.
I love that. Great breakdown. I want to push on a whole bunch of things you just said. I want to start with inflation because this is something that has been like gnawing at me a little bit for a while, which is to me, or I hear all over the place, oh, it's because of the stimulus and we pumped all this money into the system and that's why there's inflation. And that, I just can't compute that. To me, this feels like such a supply side inflation problem where it feels very supply and trade driven. $1,400, like it's been a year. How long has it been since the last checks went out? We're still just all like cruising on $1,400. That seems insane to me. And the other thing is we're seeing inflation like at the grocery store. We're seeing in everyday goods that you're not buying more of because you suddenly have more money. I totally get that when we print money and we give people money, that's when you see equities pump, people throw their money into crypto, and we could see inflation in those asset classes. But nobody's buying like 6 loaves of bread because they were given $1,400. So the day-to-day inflation that I feel like people are really reacting to is all supply chain based, is my feeling. And I feel like I'm taking crazy pills because I feel like I hear all over the place that it's about the fact that we printed stimulus. Now I'll say I'm a UBI fan, so maybe I'm a little defensive because I feel like this is like, everyone's like, oh, UBI would cause crazy inflation, blah, blah, blah.
You must have worked for Andrew Yang.
Have I shown my hand? But can you respond to that for me?
Yeah, I agree with you. It's much more supply side than demand side. But at the same time, if you pump the market with a ton of extra cash, then consumer goods, and they're going to just perform exceptionally well. And so people are going to raise the prices, right?
So here's my concern.
Yeah.
You say we have to raise interest rates. What interest rate raising will do is kill demand. It doesn't fix supply chain issues. So it feels to me like the Fed feels like they have to do something because they messed up. They said inflation was transitory. They were clearly wrong. Now they want to show that they're doing something about it all, that they get it all. But the only instrument at their disposal is not actually an instrument attacking the real fundamental problem. Again, am I taking crazy pills or do I have a right to be concerned about this?
No, I mean, I agree with you. The outcome of raising interest rates is that GDP growth is going to slow down, right? But at the same time, that's going to flow back into the demand side and hopefully fix supply issues in the sense that demand is going to be lower, so we don't need as much supply. People are going to be saving less money because interest rates are lower. Right now, American savings are really high because, again, of the stimulus checks. Hopefully that flows through. I will say, I don't blame the Fed for thinking that inflation was transitory. I think it's hard to predict global events happening and crippling supply chains as much as they did. Did anyone think that war between Russia and Ukraine was going to happen? Probably not. Ukraine is one of the biggest grain exporters in the world. And when you couple their decreased oil output with OPEC's decreased oil output, I mean, supply chains are going to just be hemorrhaging, right?
And to be fair, well, I guess not to be fair, to attack the Fed, to take the counter, the Fed was saying it was transitory before Russia-Ukraine hit, right? They were saying that. In fact, I think they switched their position on the transitory thing around the time that Russia-Ukraine hit.
As the world opened back up,
sure,
supply issues related to COVID would be solved.
Yeah. And look, I don't think they're wrong about that. I think they got the timeline, right? Like what is transitory? If inflation eventually decreases, right? Like what is the timeline at which it's transitory? If it disappeared in a year, is that transitory? If it disappeared in a month, is that, I don't know what their measure is, but I don't think they're wrong. I think they're probably wrong in how quickly it was going to happen. You can't shut down a global economy and then for months and then expect like on a dime it can just turn all the way back on, which I think is what we've seen.
I agree. I mean,
it's like once traffic starts moving again, when there's been a big enough traffic jam, it takes a while for it to trickle down to the cars and the way back, even if traffic's moving. So
listen, at this point, everything just comes down to semantics. Like you have the White House and the Fed saying we're not in a recession after we've seen 2 consecutive quarters of negative GDP growth. If we can just change definitions like that, then words stop to mean things. Yeah. And you look at CPI, like inflation's reported at 9.1%. Real inflation's probably double digits right now. It's going to keep going up. It usually takes like 3 to 4 quarters for interest rate hikes to actually see an effect in CPI. The market right now is pricing that we're going to go to 350 bips by the end of the year. And then once we start to see inflation go down, the Fed is going to lower interest rates significantly like they've done in the past. So everyone wants to know when prices are going to go back up. Don't expect us to see a recovery for another 12 to 18 months.
Not the news we want to hear, man. Not what I want to hear. Well, we'll talk about what that means from a trading perspective and where you think, how you're playing the next 12 to 18 months. But I want to keep unpacking your call it initial monologue, which I think packed a lot of awesome info in there. You talked about the tight coupling, I suppose, of equities and crypto. And yeah, I'm curious, first and foremost, do you think we'll ever see that decouple? Or these two asset classes always, are they going to move in tandem with equities driving?
Yeah, I mean, the reason that they are coupled right now is first, institutional and retail investors are going to dump their most volatile assets first. And that really just translates to crypto and NFTs.
And Netflix. And that's why we saw the big tech drawdown.
I mean, companies that are priced on future cash flows are going to be hemorrhaging when interest rates go up, right? I think we're going to see a decoupling. It might not happen for several years. You have to think about the value propositions of Bitcoin, right? And I'm by no means a Bitcoin or Ethereum expert. I am mostly focused on NFTs. But the value proposition of Bitcoin is digital ownership and digital sovereignty, right? It's theoretically supposed to be a hedge against inflation. But right now, it's doing the exact opposite, right? It's just trading in tandem with the stock market. That being said, listen, my original thesis for getting involved in crypto and NFTs is that right now, if inflation is, let's call it 5% year over year on average, and the stock market is going up 6 to 7% on average year over year, you're really only seeing 2% gains. So my bet is that all of these financial instruments that are new to the market, crypto, NFTs, all of the different chains and platforms, bridging solutions, et cetera, the expected value on them is higher. Like you have an option between earning 2% year over year or earning something like 10 to 20% year over year. You just have to have the appetite for risk. And
I think this is such an important point, and I'll say why. Because historically, we've seen average stock market returns of 7-8% year over year, over a long enough time horizon. And I think, I know for myself, that was sort of the number I had gotten locked in on of like, okay, great. I just DCA into some Vanguard, S&P 500 style thing, and I can get my 7-8% return if I just keep it there, until I retire or whatever. And this unlock moment for me of like, oh, no, like that has been the last 20 years or 50 years or whatever it's been. That's not guaranteed to be the future. And actually, if we look at, because of the money printing going back starting from 2008, how much money has just consistently been pumped into the system that has probably created these asset bubbles in things like equities, we really should expect lower returns moving forward if things start to normalize a little bit. And so shit. And then you look at inflation being what it is, like you're actually losing money then over the long term if these returns end up being more like 4, 5, 6% instead of 7 and 8%. And so then you have to look at where else can you go. I think new technologies like crypto and NFTs, obviously I've made the same bet you have there. The other one is it's arguably a call for entrepreneurship, and that like one of the best ways to maximize capital is like literally investing in yourself and a business that can have much higher growth rates. So I appreciate you bringing that up.
I think all of this was highlighted during COVID. So the Fed dropped interest rates to 0. They said for the first time in history, they would consider the buyback of equities, which really just translates to most companies are not going to fail, right? So the fact that no airlines went under during COVID just screams we're in an artificial price bump. So you're earning 3% on equities during COVID. Investment grade bonds are earning like very, very low yields because rates are down. The Fed is going to bail out these companies. So that's why you saw a major pump of crypto assets, because people just weren't earning the same amount of yield in their traditional financial instruments.
Yeah. So what's fascinating to me, you mentioned that these blue chip NFTs, which are the ones that have really held up during this period, trade like mid cap equities, and we're seeing them take a hit as interest rates go up, because as interest rates go up, that, you know, there's those cash flows become more appealing, rather, you know, like safer investments like bonds, whatever, become more appealing rather than the future cash flows of mid-cap equity stocks, et cetera. Do you really feel like the blue chip NFT investor is that savvy and is thinking along those lines? It makes sense to me when you talk about equities, because you have these big institutions that are thinking to that level of granularity and are modeling it out like that. But your average Bored Ape holder, is that, or maybe not average Bored Ape holder, but like Bored Apes are also moving on those same whims?
The short answer to your question is no, not in the slightest. I think there are maybe 5% of people who are buying NFTs who actually think in these terms, but it doesn't really matter. Most of the market is controlled by a very small number of people. Like you can look at any percentages of, you know, the top 100 holders that own all of these projects, and most of them dictate the market. But I think what's important to note is that the NFT market is not going to have different market dynamics than the traditional market. So in times of recession, you're going to see a flight to quality. And what is quality in the NFT market? Bored Apes, Artifact, Doodles, Moonbirds, and Proof.
Art blocks.
So art blocks. Yeah, I mean, that's a separate conversation too, is like, what are the safest assets in NFTs? You have two types of NFTs in the market right now. You have, you know, your traditional cryptographic art with no utility, and then you have cryptographic art coupled with utility. So the punks and the art blocks of the world, in my opinion, are always going to be valuable, but for a very different reason than something like Doodles is going to be valuable. And in times of market downturns, like these are going to be the best performing assets, because not only do all of these companies have a ton of runway, but they also have a long-term vision. They don't care about market dips every 6 months, right? They care about 10 years from now.
I almost worry more about the assets that have a utility component to them. And I've talked about this in the podcast a couple of times recently, so people might be hearing me say this again, but there's such a clear analog for fine art as a store of value. And so it's not hard for me to make the case to my 60-year-old father that generative art is an understood art form that will grow in significance, and art blocks are going to be the Picassos of the future that will trade in the fine art houses, and it's a good store of value. The concern I have is that there will never be utility delivered by Bored Ape Yacht Club that itself justifies trading at $100,000, $300,000, $500,000. And at some point that comes to a head as people realize there's never going to be a utility that warrants that.
I totally agree with you. And I think that's why we're seeing a massive market correction right now. The prices when Bored Apes, the floor was $450K, pure speculation. Like, you're not going to be receiving $450K worth of utility for a decade, right? And all of that comes down to mass adoption. The only thing that gives all of these NFTs value is if other people are buying into the ecosystem. And the only reason other people are going to be buying into the ecosystem is if the brand grows, is if there are underlying use cases. So maybe at this point, we should talk about the actual value of PFPs. And if someone is trying to explain to their mom and dad why they just spent $200,000 on an NFT, how they can actually justify that. So I think there are 4 value propositions of PFPs. The first is digital identity. The second is conspicuous consumption. The third is community. And the fourth is utility. And utility is really a black box right now. I would almost make the argument that there is no utility in the market right now, that these in real life activations, these exclusive merchandise, those don't actually count as utility, and airdrops certainly don't count as utility, which we can talk about. But let's break down all of those buckets. So in terms of digital identity, humans spend about 1/3 of their lives staring at screens. As another point of contact, according to a Barclays survey in 2018, about 10% of consumers buy clothes just to post on social media. What do those 2 stats tell us? They tell us that digital identity matters as much, if not more, than physical identity. How does this translate into PFPs? Well, PFPs can be avatars in the metaverse. They can be characters in play-to-earn games. They can be your icons on Twitter, on Discord. So there's something there, right? And I think as the world continues to trend more digital, these are only going to go up in value. The second is conspicuous consumption, the Veblen model that as price goes up, demand goes up. Conspicuous consumption, whether or not you choose to take part in it, will always have a role in market dynamics. People will pay for Lamborghinis over BMWs despite them driving very similarly. People will pay for Rolexes instead of digital watches, even though they both tell the same time. If anything, digital watches tell a more accurate time. People just want to show off these ornate displays of wealth. The problem with physical conspicuous consumption is that you can only show off that wealth to the people in your immediate vicinity.
Well, unless you're buying it so you can show it off on social media, which we know people are doing.
Which plays back into the digital identity.
Yeah.
But when these assets exist on the blockchain, you can theoretically show them to the over 6.5 billion people that own smartphones. So this conspicuous consumption is going to compound over time. Next, we get into community. Founders like Alexis Ohanian have made their entire careers around empowering creators via digital communities. There will always be this in-group, out-group psychology. You see it in the real world with sports teams, religions, colleges, every other institution. People want to feel part of this community. There is some intangible value that you will always receive. I would argue that the biggest value proposition as it relates to community is actually networking. So right now, Web3 is attracting the smartest people from every vertical of Web2. This is not always going to be the case. If you think about internet companies in the late 90s and early 2000s, back then, there were internet companies. And today, you just have companies that use the internet. I think the same thing is going to happen with blockchain and NFTs, where right now we have a ton of companies that are blockchain native, Web3 native companies. In the future, every company is going to be integrating this technology, but they're not going to define themselves as blockchain companies. So right now you have the smartest people that are all joining these communities and buying PFPs. There is this network effect right now that you cannot get in any other industry or any other space. And then lastly, we have utility. And again, this is the biggest black box. I don't think utility actually exists. There seems to be this narrative in the market that airdrops are the biggest form of utility. The problem with airdrops, you can look at any graphs. The combined value of the original asset plus the follow-up asset is almost always less than the original asset's value was pre-airdrop. So airdrops definitely have some value to them in the sense that they can give holders less exposure to the project so they can de-risk by selling the airdrop without completely exiting. They add extra liquidity to the project as well, but I would by no means consider it utility. So what is utility going to look like in the future? This is the big question everyone wants to know. I think it's going to happen in a few different phases. I think first we're going to see utility with low-hanging ventures like ticketing, hospitality, and reputation score. So let's just look at ticketing first. 10% of consumers also admit to buying fake tickets. This is American consumers. If tickets exist on the blockchain, then you have automatic verification of authenticity. So you never have to worry about buying a fake ticket. Moreover, there are billion-dollar companies, StubHub, SeatGeek, which act as middlemen for the transacting of tickets. If these tickets, again, exist on the blockchain, then there is a free open market economy with true price discovery for secondary sales of tickets. Again, artists can add utility to these tickets in perpetuity. So let's say The Weeknd. I was listening to The Weeknd when he only had 40,000 plays on Spotify. If I could have bought his ticket, yeah, flex. This was back in, I want to say 2015 or 2016 when I was in high school. Absolutely loved him.
I have you beat. I listened to The Weeknd in summer after my freshman year of college, 2013 and 2014. Somebody introduced me to The Weeknd. But I wasn't on Spotify, so I didn't even know how many streams he would have had at that point.
Yeah, when The Weeknd said "Can't Feel My Face," it really resonated with me. So if I had bought The Weeknd's NFT when he first came out and he was offering 20% discounts on his tickets in perpetuity, or if he were offering incremental benefits like backstage passes, then I, as a consumer, start to reap the benefits of investing in the artists early on. And in the secondary market, they then generate royalties. So it's another revenue stream for them. This is a pure form of utility, which I think is going to touch every industry. It's going to just take a while to scale.
Can I just, 10% of Americans have bought fake tickets? Do you know where that number comes from? That feels like a shockingly high percent of Americans.
I was actually going to say low.
Really?
I bought so many fake tickets. It's better now than a few years ago. But yeah, hundreds of millions of dollars.
Where have you bought fake tickets?
StubHub. I don't know what the state of StubHub is now if they check them, but before they weren't. Yeah, I bought a fake ticket to Brooklyn Mirage.
Oh wow! You can see that I'm not cool, and I buy tickets to very few places, and I'm not like a concert goer particularly. I love music. I'm just not a concert goer. So this is not. I have not dealt with this. That is fascinating. I will say I've talked about this on the show before because I'm very bullish on NFTs as tickets, and I've talked about that as being, to me, probably more than gaming, the Trojan horse that makes this all go mainstream. I know one of the challenges is that like Ticketmaster, for example, owns most of the biggest concert venues around the country. So they have to get on board with it because if you're The Weeknd at this point, to do a tour, you need some of the big stadiums that Ticketmaster owns. So you're quite beholden to like the rules they set. So until Ticketmaster has decided that they understand the kind of monetary value prop to them, which they should, because again, they could take a cut of secondary sales just like the artist. It's not just up to the artist at this point, at least when it comes to the super big ones who need these big stadiums as part of their tours. But let's keep going. So you said ticketing. The third utility you mentioned, or the third example, remind me what that was. It struck me as interesting.
Yeah, so hospitality and reputation score.
Break that down.
Yeah, so hospitality makes a ton of sense. Let's think of Soho House as a comp. So if Soho House released 5% of their membership supply as NFTs, then first of all, again, we have true price discovery where let's say it costs $1,000 a month to join Soho House, but the average consumer values that at $5,000. Then suddenly we're going to have an open market where the company itself is generating higher royalties in the secondary market. Now, Soho House might not be the best example since they want to keep it exclusive.
Yeah, they curate who can join.
Exactly. But there are a ton of examples that are going to integrate this into the future. And then in terms of reputation score, I know a lot of people have been talking about this. Vitalik is very big into the idea.
Soulbound NFTs.
Right? Soulbound NFTs. Right now, and this will not always be the case, there are, and we have to be realistic here, there are a lot of scam projects, a lot of Ponzi-nomics that we're seeing in the market right now. And a lot of this is because people can remain anonymous. People are throwing millions and millions of dollars to projects that they know nothing about, with founders who are not established by any means. In the future, this meta is going to change, and you are going to need to see someone's digital resume, someone's digital passport. You're going to need to see people vouching for other people like you would on LinkedIn, so you can give someone a thumbs up or say they exhibited these qualities. And this is going to be the meta going forward, where people aren't going to be throwing a ton of money into projects that they have no insight into. And reputation score is going to touch everything to me. Every single Web3 platform is going to integrate it.
I think people get nervous when they hear that, because they think of like China's credit scores being built on like, you know, did you once piss off somebody who can, you know, hurt you in this, that, or the other way. And so I do think there are reasons to be wary of this. But I also think there are really obvious, maybe even earlier steps than like broad reputation. To give you an example of what I'm thinking is like what we just saw with 3 Arrows Capital, right? Like Suzu is borrowing money, $1 billion or whatever he's borrowing from Celsius over here and so over there. And none of these lenders presumably knew that he was going to all of them and getting $1 billion. And had they known, probably would have been a lot more skeptical and a lot more reticent before they gave him $1 billion. Really? So loans, and I actually think this is something Vitalik has talked about with soulbound NFTs specifically, and I think it even predated the 3 Arrows Capital situation, is the loan example of like, you know, we should be able to see out publicly. And it gets uncomfortable, right? Because maybe as an individual, you don't want all of your loan data shared, but like ways for if you're asking for a loan from somebody else, they can access and see in these immutable ways what else you have outstanding, so we can prevent these kinds of scenarios.
100%. I think we're going to integrate zero knowledge in the future, where maybe not everyone can see it, but in order to take out a loan from one of these companies, you have to share your soulbound NFT with them.
I want to get us into some specific NFT projects. Again, Doodles, Otherside Meta, but I want to stay a little bit in this more abstract world for just a few minutes more. I want to ask you, again, kind of going back to the macro environment where we see consumer demand, despite consumer sentiment being really low, consumer demand has remained strong. And this is, in theory, what the Fed is trying to kill, which is with interest rate hikes and et cetera, et cetera. I would guess do you listen to the All In podcast? You would strike, I feel like you would enjoy it. You would strike me as somebody who would listen to it.
I only listen to yours.
Oh, nice. Well played. Damn. Sucking up to the host. Love it. David Freeberg, an investor and very smart man on the All In podcast, has been beating this drum of a credit crisis and feeling like the fact that consumer demand hasn't seen more of a hit, or haven't seen the hit we would maybe expect, given inflation and all the rest of this. Do we have a looming credit crisis? And I'm just curious if you have any thoughts on this, and if you felt like that's something that would really hit NFTs potentially.
Yeah, it's a good question. So right now, if we just look at the credit market, there tends to be a delay in the credit market in terms of pricing in recessions. So a few weeks ago, the credit market was only pricing in a 30% chance of recession. And you saw investment grade companies and high yield companies still issuing a ton of debt because interest rates were low, but they were expected to go higher. So companies right now are really well capitalized. And I think the same applies to the top NFT projects. So you saw Doodles raise a ton of money through venture capital. Otherside has raised $450 million from A16Z, $200 million from their land sale, $100 million in secondary royalties. Moonbirds raised $90 million through their primary sale. So these companies aren't going anywhere. I worry more about the smaller companies that don't have this runway, but had these big plans and big developments. Like, how are they going to be paying their employees in the future, especially when secondary volumes, again, are just tied to the overall market and they're down tremendously? If people were pricing in, if people were forecasting in their budgets that they were going to continue to get the same amount of money that they had been getting for the last 3 to 6 months, consumers just consumer sentiment is like the worst it's ever been right now.
I want to talk about some of the obstacles to mainstream adoption. That's obviously what we're all trying to drive at. And you made an interesting point that I heard at one point about like ease of use. None of us, this isn't a hot take to say that crypto and NFTs are not easy to use, or NFTs in particular are not easy to buy, and it's ridiculous. And I just recorded a conversation where we were talking a lot about the scams that are happening and how there are add-ons, there are Chrome extensions, there's things you can add to your whatever life that are good to help you prevent these scams, but how the opposite of what we need right now is more hurdles, more things that individuals need to do in order to protect themselves to get into this space. And that's like the opposite of what we should all be shooting for. You made an interesting point. You said 70% of shopping carts are abandoned before purchase in like the Web 2 world. So I maybe talk about this a little bit of just like, I think it illuminates, if you expand on it, just how far we are from like where this hopefully will all end up being, and how primitive so many of the systems we use in crypto are. And I think the shopping cart example is a good example of that.
Yeah. So there are about 100 million crypto investors, and there are only 1 to 2 million NFT investors. So why are there 100x, traditional coin investors? I think the answer comes down to ease of use. So to buy crypto, all you have to do is connect your bank account to a centralized exchange, click buy Ethereum. To buy an NFT, you have to do that. You have to then send the Ethereum to a wallet like MetaMask. You then have to connect your MetaMask to OpenSea, and then from there purchase the NFT. In between all of these steps, there is a high learning curve, right? It's easy for us. We all take for granted because we are so accustomed to the ecosystem and buying an NFT. We don't think about in our first week in NFTs how difficult it was to actually navigate the ecosystem. So I think what's going to lead to mass adoption is a few things. First, I think credit card purchases are really going to help us. You look at blockchains like Flow, for instance, which integrate USD purchases. I think this is a really easy way to onboard the masses. When you think about it, most people don't want to hold their cryptocurrencies in decentralized exchanges. We all tout the benefits of having digital sovereignty, but how are you going to retrain 7 billion people who have had their money in banks to suddenly trust it to decentralized wallets where they have to keep their seed phrase hidden, right? It's a hard gap to bridge. Other than that, when we look at the microtransaction market, which I think is going to be what gets people to adopt NFTs, so few people are going to be spending $50,000 on an NFT when they don't really understand the value propositions of it. So once NFTs get integrated seamlessly into gaming platforms, ticketing, et cetera, that's when we're going to see mass adoption. The problem with that is scalability. So who is going to pay $50 in gas fees for an NFT that costs $20? No one, right? So we're going to have to move to chains like Polygon, Immutable X, Flow that solve this scalability problem in order to actually onboard millions of people.
I really want to have the scalability conversation with you and the kind of various theories of the case as to how we get there. I've said now multiple times, and I will say this is not a hard and fast opinion that I see as unchangeable, but I see the path for scalability for Ethereum. And I think I see it maybe more than I see the case for like really secure bridging between chains. And which leads me to a slightly more maybe Ethereum maxi position, because I think network effects will accrue there, et cetera. But maybe let's have this conversation in the context of Doodles. So because you put out a thread, it's maybe a few months old at this point, a month old. I've lost a sense of time in this.
I write a lot of threads.
I've lost my sense of time in this industry, of course. But I think it came out shortly after NFT NYC. And after the Julian Holguin, presentation and announcement about really like the future of Doodles. So why don't you give me your thoughts on Doodles, maybe outline the business case, et cetera, that you made for Doodles in that thread, if you can think back. And then that'll get us to what their future looks like and will they end up on Flow? And I've been pretty public saying I'd like them to end up on an L2 and we can have that whole conversation.
Yeah, I think the team is committed to integrating a chain outside of Ethereum in order to scale for the reasons that I listed before. So let's talk a little bit about their business plan. And this is informal. The team hasn't come out and say this. This is just how I view Doodles scaling over time. So phase one is establishing Doodles as an NFT brand. They have done this quite successfully. The second is setting up a mass market framework. That's the phase that they're currently in right now. We're gonna break that down. And then the final phase is to monetize IP. So once we have a bunch of consumers who are familiar with the brand, how are we going to actually translate this into revenue? So in terms of establishing themselves as an NFT brand, why was Doodles a success story? Well, first, the art just resonates with everyone. If you show someone outside of Web3 a Bored Ape and a doodle, I have never met someone who prefers the ape artwork over the doodle. Now, that's personal experience. Some people are going to disagree with me, but Doodles is much less intrusive to the non-Web3 native consumer. Second is the team itself. Jordan Castro goes by Poopy, is a thought leader in the space. He pioneered CryptoKitties back in 2017. He lifted wrapped asset technology from CryptoKitties, improved it, and integrated it into Space Doodles. And then they have Nate Alex, who just founded Bucket Auctions, which is the closest we've seen to price discovery at Mint, and we can talk a little bit about that.
I've talked about that on this podcast. And Nate Alex, I will say, is maybe the other shitposter. I might like even more than you, Degentraland. I think Nate Alex is a grade A shitposter.
He's a floor influencer. Yeah. Great guy though. Great guy. So, okay, they've established themselves as a leading NFT brand. Now, how are they going to set up the mass market framework to actually onboard millions of people like they say they're going to do? First is moving to a scalable chain, right? Again, if they are pursuing wearables as one of their largest verticals moving forward, one of their largest revenue sources, they can't have this be on Ethereum because no one's going to pay $50 for a $20 wearable.
So I want to respond to that.
Go ahead.
Because I think this is the perfect example to talk about. So when you describe wearables, these are wearables that presumably your doodle will change into. This is you being able to have more control over your identity. You'll buy a wearable. My doodle can change into a Taylor Swift t-shirt if I want it to really more fully reflect who I am. Correct? So where the breakdown happens for me is if that wearable is on Flow and my doodle is on Ethereum, that feels like a pretty significant conflict in terms of being able to get my doodle to wear my t-shirt. Whereas if I put it on a layer 2, I'm with you in that we may not be there yet, but it's worth waiting to get to that point, to have your entire ecosystem in one place rather than rush it out on Flow because the experience is slightly better now and the scalability is there now. And I think the team is smart and will end up there.
So yes, I agree with you. I think every L2 chain or scalable L1 chain has their pros and their cons. I think one of the best things about Flow, and I don't think the team is going to end up using Flow. I don't want to speculate, but I think they're probably going to lean towards Polygon or Immutable X. One of the benefits of Flow, and Polygon actually just announced their ZK EVM, which is going to essentially accomplish the same thing, which is it's really easy to onboard Web2 developers into the ecosystem. So Flow's language cadence is really easy for JavaScript developers to code on. And sure, it's important to onboard millions of consumers into the ecosystem, but it's also important to onboard the people who are actually going to be fleshing this ecosystem out. I agree with you, and I think the market would resonate much better with keeping all of it within the same ecosystem, which is a benefit of Polygon, for instance.
I thought you had a really interesting point on that I don't know well on sharding. And on sharding, putting the emphasis, let me find the quote. So, and not to get too technical here, because I'm certainly not the person to have a deeply technical conversation. But I want to be open-minded. And again, I don't want to be an ETH maxi simply because I understand the Ethereum scaling plan better than I currently understand Flow or Cosmos or one of these other ecosystems. So I'm very open to always learning more. And that's why I say this is an opinion I hold, but it's not an unchangeable position that I hold. You mentioned in this Doodles thread, actually, and as you were talking about flow, and in some ways at that point, this was several months ago, making the case for flow, you said Ethereum sharding loads the hardest part of blockchain scaling onto application developers rather than solving it at the protocol level. So this seems to get to the point you were just making around what you like about flow being that it's very easy for developers to be onboarded into the system. And sharding is the next phase of Ethereum, right? We have the merge in theory coming in September. From there, the goal is sharding, which will help scale us to 100,000 TPS, transactions per second.
Yeah, we'll see.
So you're a skeptic. So help me understand, just again, without us getting too technical, we don't have to sit on this for too long, but when you say Ethereum sharding, which again is the scalability, this case for scalability, loads the hardest part of blockchain scaling onto application developers. Can you break down what that means?
Yeah. So the way that flow works is they break down validation into 4 separate stages. So each node is in charge of validating one of 4 of those stages. And then the Ethereum ecosystem validators have to validate every part of that transaction. So in that sense, it's a lot more scalable. It's not that I'm a skeptic of how scalable Ethereum is going to be. I just don't think we're going to see the final form of Ethereum for potentially decades. And Vitalik has tweeted about this a lot, that there are going to be separate phases of improving Ethereum. And I'm sure you saw recently, he said the merge isn't priced in, and then he quickly backtracked into it's not priced in from a narrative standpoint. I do agree with him. I think the merge is going to do a lot of good, and I think we're going to see a lot of traditional Web 2 platforms start to adopt Ethereum and other blockchains as they become more scalable. I just think the timeline on this is decades rather than months.
I think I'm maybe slightly more bullish. I agree with you. We've got a ways to go. I mean, Vitalik himself has put sort of some percentages on this. He said after the merge, which should hopefully be September, we'll be at 55% complete. And then you'll have the surge and the verge and the purge and the splurge to follow. I love that man so much. And I guess
I've been saying this for a while. Vitalik is the only person without a God complex who maybe should have.
Oh my God, I love
complex.
that's a good way of putting it. This will be now the second time today that I've just like had like a complete gushing sesh over Vitalik, where he is like, it almost makes me believe in God. I'm not a like particularly religious person, but it's like the fact that like this is the man and this is his temperament and this is the kind of person that is leading this very kind of critical next phase in human evolution almost feels too perfect, because how easily it feels like we could have ended up with somebody money obsessed or dark or cynical, and instead we get what feels like the purest human you could possibly imagine. And it's kind of remarkable. I won't be too redundant, because again, the episode of the podcast that's coming out tomorrow will have me saying a whole long thing about Vitalik, but I totally agree with you there.
I think to your point really quickly, I think decentralization should be considered the fastest growing religion in the world. I think it has a cult following right now, but it has everything that a religion has: ideals, values. Like, what are the values of blockchain? Transparency, efficiency, objectivity, fairness. Like, these are religious qualities. And I think as the ecosystem grows, I don't want to say this, but I think it will have a role in undermining monotheistic religions.
I hope you're right, because I think people need something to believe in. And so that's why religion, we can't have a world where folks don't have things to believe in. But things get very dangerous when people cling too hard to things they believe, especially when it comes to ancient texts.
Immutable X is the layer 2 platform for crypto gaming. Immutable offers massive scalability with up to 9,000 transactions per second and instant transaction confirmation. No more gas fees, no more waiting around for your transaction to clear. Immutable's zero knowledge rollup finally unlocks the world of crypto gaming. Immutable X is the only gas-free NFT minting platform with over 26 million NFTs minted, all with zero gas fees. With the power of Immutable, gaming developers don't also need to become smart contract developers. They just need to plug in to Immutable's API and instantly start unlocking the full potential of crypto assets inside of games. This is why world-class companies and projects have decided to deploy on Immutable X, like GameStop, Ember Sword, Planet Quest, Illuvium, TikTok, and many more behind the scenes. So start building your game on Immutable X today at immutable.com. There is a brand new staking feature in the Ledger Live app today. We all like staking the assets that we're bullish on, and now you can stake 7 different coins inside the Ledger Live app. Cosmos, Polkadot, Tron, Algorand, Tezos, Solana, and of course, Ethereum. With Ledger Live, you can take money from your bank account, buy your most bullish crypto asset, and stake that asset to its network, all inside the Ledger Live app. Through a partnership with Figment, Ledger also lets you choose which validator you want to stake your assets with. And Ledger is running its own validating nodes, offering a convenient way to participate in network validation, and it even comes with slashing insurance. Ledger Live is truly becoming the battle station for the bankless world, so go download Ledger Live. If you have a Ledger already, you probably already have it, and get started securely staking your crypto assets.
So let's just maybe wrap on this Doodles piece with a conversation on this. And I feel bad because I feel like this conversation has seen me be quite cynical about NFTs, which I'm not in the least. I do think that there's arguments for the Ponzi-nomics thing. You mentioned it. Airdrops is sort of keep the Ponzi alive, has a keep the Ponzi alive dynamic to it. But I think you lay out this really fantastic framework that I fully agree with when it comes to digital identity and conspicuous consumption, which is why I am actually bullish on NFTs, despite also wanting to call out that I think the utility will never arrive to the point that will itself justify a $450,000 valuation or whatever. So I give that caveat to say what I'm about to say with Doodles, which is I think Doodles has a tremendous opportunity to be one of the, Disney level IPs or whatever that emerges from blockchain. If I think you have a lot of players out there saying, hey, we're going to be the next Disney, and very few will achieve it. Very few anything become really mainstream and worldwide known. So that'll be true for NFT projects. I'm pretty openly bullish about Accrue and Accutars. I think they have a real chance to be mainstream known. And I think Doodles is as well in that camp. The question to me is, what does that mean for the original NFT holders? And Doodles could have a tremendous amount of success without Doodle holders all becoming millionaires. And this is potentially going to be a very uncomfortable situation in which we find ourselves in some number of years if this happens. And Doodles is obviously very open about wanting, they're going to have an unlimited mint, and they're trying to bring in unlimited new holders they want millions of Doodles out there, which makes a lot of sense for them as a business. But what do you think all this means for Doodle holders?
So I agree with you. I think it's important to remember that company valuation and holder valuation are not synonymous. In fact, I would take it a step further and say oftentimes holders have very little leverage. So holders require the company to appreciate in order to accrue value, but the company doesn't require holders to appreciate in value for them to see higher valuations. So the question is, how are holders going to accrue value over time? It's very easy to see how the company is. They're going to target synergistic partnerships. They're going to monetize their gaming venture. They're going to release merchandise and toys. How are holders going to see value? Well, I see this happening in 3 ways. So the first is IP. Open IP like apes have. There's a lot of value to this. You can grow your brand in tandem with the brand of the company or the project. The problem is that oftentimes when you give holders such open, so few restrictions in terms of what they do with that IP, it can oftentimes dilute brand. So a Doodles holder could open up a candy store, which might be very synergistic with the company, but then another Doodles holder can open up a strip club or brand their own construction company, right? And if one of the biggest value propositions of Doodles is to drive narrative forward, and to create a cohesive brand, then it's probably not in their best interest or the holder's best interest to give open IP. So the solution here, the second way, is to do IP licensing, where let's say Doodles is coming out with an animated show on Netflix, and they want to feature some of the Doodles characters in that show. Then holders can license their Doodle to the company and then receive, call it 10% revenue share off of Doodles profits. That could be distributed pro rata, let's say. And then the final way where holders can accrue value, and this is, I think, going to be very important moving forward, is to revise the DAO structure such that participants can reward through their commitment to the brand. There are a lot of different platforms that are targeting reward structures and incentive mechanisms, Coordinape, SourceCred. I think what's important, though, is to note that participation in DAOs is abysmally low, especially in NFT projects. You're lucky to see 10 or 20% participation. So the question is, how can we incentivize participation in order to grow the company brand and also reward holders in doing so?
Do you have an answer to that last question?
I do really like the Coordinape model. So what Coordinape does, they implement gift tokens where, let's say, every Doodles holder gets 10 gift tokens. If you keep them for yourself, if you retain them, they are worthless. So you can gift them to other community members, and then those community members can trade those in for, say, a portion of the DAO's community treasury, or if the project implements tokenization, you can earn tokens on that. And this is a really good way to incentivize this intangible participation. So it's not just your participation in the DAO, but maybe things you do for holders in real life that they can compensate you for, or your intangible participation on Twitter or Discord in helping grow the brand. There are a number of downsides too, one of which is the most notable holders are going to receive an outsized portion of the tokens. So call it me and Nate Alex, may be rewarded disproportionately to the work that we're actually putting in.
Embedded in, I think, all of this, the answer you just gave, and even the answer before, where you're talking about like licensing deals or building your Doodle brand alongside the growth of Doodles themselves, for example, or that, as a model in general in NFTs, whether it's specific to Doodles or not, this is something I've talked about before on the podcast, which is accepting the idea that it's not all black and white. Like, not all holders have to become millionaires for NFTs to be a success story. And I think I see this in the art world, or on the artist side of things, where you'll have, let's call it mainstream people or people sort of outside of crypto, point to all of these artists who are not getting rich on NFTs, or even are saying, hey, their work's been stolen or this or that. Like, what a scam and what a failure NFTs and crypto are. And it's like, look, we should deal with the fact that you have artists whose work is being stolen. That's clearly a problem that I believe that is surmountable, and we'll get there, whatever. But to point to the fact that not every artist is getting rich from NFTs as the failure point, or even that most artists aren't making money off NFTs as a failure of NFTs and the technology, is so bizarre, because the story is actually the fact that any artist, digital artists in particular, who previously was really limited in the way that they could monetize their work, the fact that any of them are now making a living in a new, revived, amazing way, is the cool story. And I think it's going to be similar here with PFPs, which is revising our expectations that it's not necessarily that every one of us who holds any one of these projects that has success is going to then see commensurate success, but you are going to have people, Jenkins the Valet may be a good example. You're going to have people who are going to build really cool brands, build really cool things with the IP that they've been able to use from this broader brand, grow it with this brand. And that's so cool. Like, that is a new opportunity, and making sure that we stay focused on the fact that there are going to be some people who are going to have these new avenues from which to show their creativity, as opposed to focusing on the fact that it's possible not all of us will get rich from riding the wave.
Totally agree. I think it really comes down to how you characterize yourself in the NFT space. So if you think of yourself as an investor, what do you look for as an investor? You look for a very high ROI. And when there is a really high entry point to a lot of these projects, call it $10,000, people want to make 20 or 30K. On the other hand, people who consider themselves collectors don't care about ROI, right? They're buying the piece because they resonate with it, because they like the community. And so I see a lot of friction here between how certain companies think of NFTs and how the actual holder base thinks of them. And I don't think it's fair to necessarily deride some of these NFT founders who really just think of their collections as collectibles. On the other hand, for holders, if you are spending $1,000 at mint and then the company grows into a multi-billion-dollar company, you are essentially a seed investor who just made the riskiest investment of your life, right? The one that is probably going to see the lowest expected value. So in that regard, I think it's fair for them to expect some sort of high return.
Let's maybe take this conversation over to Meta and to the Otherside Meta, not to Meta. That's deeply confusing. The Otherside Meta. I know you had a great thread on that as well. Why are you so bullish? You seem to be very bullish on Otherside and the Otherside Metaverse. And I would love for you to just articulate in sort of broad terms, why are you so bullish?
Yeah, so this is where I get into a little bit of a TED talk, so bear with me. I think in order to understand the Otherside Metaverse, we need to understand the Metaverse in general and then the benefits of decentralized metaverses. So what is the Metaverse, right? There seems to be this misconception that the Metaverse needs to be gamified, that it needs to be 3D, that it needs to be UGC, user-generated content. When in reality, we're already living in the Metaverse, right? We're connecting to each other via social media platforms like TikTok, Snapchat, Instagram, Facebook. We are doing this podcast over Zoom. We all have supercomputers in our pockets. I think the definition, though, what most people consider this new wave of the Metaverse to be, is some open, interconnected platform akin to the internet. So the way I would define the Metaverse is, at its most simple level, an interconnected network of protocols, infrastructure, devices, payment rails, and in the future, blockchain technologies. So to me, the question isn't just what is the Metaverse, but what is the final form of the Metaverse? And I think this is where people start to disagree. To me, the final form of the Metaverse needs to be decentralized. And it's important to remember decentralization exists on a spectrum. I don't expect us to have any pure Web3 Metaverse platforms in the future, much like I don't expect any pure Web2 platforms in the future. And I think decentralization is going to be the end game here because of the benefits of it. So let's explore some of the benefits. First, we have interoperability. Second, we have scarcity. Third, we have aligned incentives between consumers and producers. And then finally, we have what I call perpetual sovereignty. Let's break all of those down. So first, in terms of interoperability, what's important to us in the Metaverse? You have history, identity, status, reputation, currencies, assets, and other elements. The problem is these can't exist in a closed platform. So you can't take your wearables from Fortnite and bring them into Roblox. Right now, you can't take reputation scores from one Web3 platform into another. You can't take your filters from TikTok into Snapchat. And what that does is that reduces a lot of the value. I think the majority of the value of these assets is going to come from the creation of a cohesive digital identity rather than a platform-specific one, and then at the same time, improving the user experience.
I'll also jump in and add the liquidity piece of that, right? Like if you're not limited, if the filter that I love isn't limited to only being visible to the people that I'm connected to on Snapchat, which frankly are quite different than the people I'm now connected to on Twitter, you just have a much bigger market. And if it's an asset then that you're looking to sell or trade or whatever, the liquidity piece of that is incredibly exciting.
Absolutely. And that plays into the interoperability of cryptocurrencies. So in Fortnite, you can't convert your V-Bucks back into USD, any other fiat or cryptocurrencies. In Roblox, you can't do the same with your Robux. And so the value of those coins only exists within the closed garden. And I don't think that's sustainable moving forward. The problem with interoperability is that asset interplay is really difficult to achieve. So a lot of different metaverse platforms require different file formats. A lot of them are built on different chains. So you have Decentraland and the Sandbox and Ethereum. You have Star Atlas on Solana. And right now we use bridging solutions to try and bridge that gap. This looks something akin to like Space Doodles, wrapped asset technology. So you take your wearable from Decentraland, lock it into a smart contract, and receive that equivalent wearable on the Sandbox. But this isn't true interoperability, right? It's two separate assets, and even if you burn one of them, it's not the same asset. So what Otherside, and we'll talk about this when we do a deep dive into their platform, what they're trying to do is build everything on a common standard. And a few days ago, it was actually announced what's called the Open Metaverse Alliance, the OMA, where all of the biggest decentralized metaverses are getting together, looking to build on a common standard and integrate portals so you can jump from, say, Decentraland to the Sandbox into any other of Animoca's platforms. Okay, so that's interoperability. Let's move on to scarcity. For a true open market economy to exist, you need market dynamics, specifically supply and demand. The problem with something like Fortnite is that Epic Games can release 10,000 rare skins, and there's no secondary market, but let's say theoretically you can sell your account for a few $1,000s. Then what Epic Games can do is write a few more lines of code and come out with 1 million more of those same wearables. And we actually saw this from their Season 1 and Season 2 wearables, where they came out with the same ones in later seasons. What this does is trends all assets down to zero, right? If there's no supply cap, theoretically, they're not worth anything. If our assets are built on the blockchain, then there will always be that supply cap, and you will always have those original assets, therefore creating an open digital economy. So next is aligned incentives between consumers and producers. I think right now there is a misalignment between the value that consumers are getting and what they're giving up. So you look at companies like Google, Microsoft, Apple. What do we give to them? We give them our data, we give them our privacy rights, and most importantly, we give them our time. So right now we're part of what's called the attention economy, where companies are no longer just competing for their bottom line and their margins, but they're also competing for time spent on their platform. And this doesn't just exist within verticals. So sure, Spotify is Apple Music's biggest competitor, but it also happens between
They're
verticals.
competing with CNN. They're competing with TikTok. They're competing with everything else that's competing for my attention.
That's exactly right. And back in 2018, Netflix came out in one of their quarterly reports and said Fortnite was their biggest competitor. This completely changed the conversation. So if we are giving up our data, our privacy, and our time, we should be receiving more in return than simply unlimited entertainment, right? So what decentralized metaverses allow us to do is, as consumers, actually earn from our commitment to brands. And this can happen through play to earn, this can happen through tokenization, this can happen through the appreciation of assets. But it's really necessary, and this is why I think Web 2 is not a sustainable model moving forward in the metaverse ecosystem. So the last piece here is what I call perpetual sovereignty. So it's kind of the value proposition of Bitcoin, that if you're in a developing nation, any government can seize your assets, no questions asked, right? And that reduces their value. In the metaverse, if everything is built on the blockchain, then you can't have Epic Games shut down your account because you violate their terms of service. If Epic Games were to suddenly become unprofitable, they can shut down their servers, and then billions of dollars of assets that exist within the Fortnite ecosystem suddenly become worthless, inaccessible. So this idea of perpetuity in the metaverse, this idea that you are the only one that owns your assets, is really important to creating an economy, right? It just goes back to property rights like you would see in the real world.
So I want to ask, and obviously we'll make this specific to Otherside in a minute, but I love how you broke that down. But your framing for all of this was decentralization, and your strong belief that the end state of quote unquote the metaverse needs to involve decentralization. And it strikes me that in a couple of those subcategories you just outlined, like interoperability. It seems to me that decentralization is inextricably linked in all likelihood to interoperability. But something like scarcity, right? You can have quite centralized blockchains that can still create a sense of scarcity, or even, I guess, arguably sovereignty, the kind of asset sovereignty. Is decentralization, the question is decentralization inextricably linked to each of those sort of four components you outlined?
I think so. I don't think sovereignty, for instance, can exist with centralization unless they integrate decentralized wallets, right? If you're holding your assets on Coinbase, that's a custodial service, and it's the same thing. Now, in America, most of us view this from a Western lens, and we have faith that our institutions, given their regulation and their reputation, are not going to just go ahead and seize all of our assets. But we're also seeing funds shut down and withhold money from everyone who has deposits on their platforms.
You're right on the sovereignty piece. I'm still on the scarcity piece. In theory, that could exist independent of decentralization, right?
It's possible. I think
this is more of a philosophical conversation than one of substance, because I'm fully with you. Like I also believe in somewhere on the scale of decentralization. I think your point about it's a scale is important, because you need a certain level of coordination that can come from centralized entities and decision makers and vision setters. But there's a lot of decentralization that can be incorporated within a vision setter's agenda. So let's talk about Otherside specifically. And I think you've laid out this case incredibly well. Why does all of it amount to you being optimistic about Otherside? Yeah.
So I think the success of the Otherside comes down to how well they can leverage those benefits of decentralization that we talked about, and more importantly, combine that technological innovation with strong narrative, strong creativity. So I think the success, let's start with technological innovation. So we can break down each of those categories as it relates to the Otherside. So let's talk about skeuomorphism first. This idea that you can transpose real world dynamics into the virtual world. So if you were part of their demo, you saw firsthand almost 5,000 concurrent users sharing the same virtual space with spatial audio and seamless motion. Now, I think skeuomorphism, hyperrealism, is going to be the future of the metaverse. I don't think it's necessarily the deal breaker to it, but you look at all of these centralized platforms right now, all of which are targeting hyperrealism.
Unreal Engine 5, Epic Games being the big one.
Unreal Engine 5, Meta, yeah, exactly. All of those ones. And Roblox is testing proximity-based voice chat too, and a lot of real-world elements integrated into their game. So if we can have 5,000 concurrent users in a space, then we target this idea of skeuomorphism in a way that we haven't before. I think a comparable example is the Travis Scott concert on Fortnite, which saw 12.3 million concurrent users. The problem that they faced is that due to computing power and some other limitations, they could only have 50 people in each session at a given time. So they had over 200,000 sessions streaming this concert to users. Now that is a feat of engineering genius, where you are combining like an amazing music experience into a game. But it's not skeuomorphic, right? And they failed to make the concert really feel like a concert. So I think Improbable is very well positioned to integrate skeuomorphism into the metaverse. That's the first one. Second is interoperability. Yuga Labs and Improbable seem very committed to this idea. So they are integrating metadata ontology, 2D and 3D file formats, universal scripting that can connect to other metaverses. And this plays back into the OMO, the Open Metaverse Association we were talking about. Next, we have scarcity. And what they're doing is really cool because they're almost gamifying it. So in the Otherside, any user can create an object template. So you can design anything that you want, but only users that have resources can actually manufacture those. And I think this is where the play to earn component is going to come in, where you are committed to the platform, you earn resources, you can then manufacture objects and theoretically earn from them. Now, we don't have a lot of clarity on this, but I believe that's where they're trending. And then finally, we have aligned incentives. And this is probably the biggest value proposition, where you play Fortnite, you play Roblox, and you get a lot of entertainment out of it. You do get some community. So there was a really cool study back in, I think it was March of 21, that said Fortnite actually led to pro-social behavior amongst adolescents. So I am not convinced at all with the theory that video game violence translates to real world violence. I actually think that's one of the reasons, as a little aside, why suicide rates in the younger generations are higher amongst women than they are men. I think women interact through platforms like Instagram, where a lot of times you get validation from the likes that you're getting in the comments, whereas a lot of men are interacting more through video games like Fortnite and building camaraderie through that. Now,
I would add the aside on that, which is I think it could have both effects, right? Like I think humans are different and we're wired differently and we have different outputs to the same inputs at times. So I think it's very possible to me that they're super positive. I think it's clear to me that there are absolutely positives to video games and it can lead to pro-social behavior. I also think if you're wired in certain ways, it can reinforce antisocial behavior that could lead you down a darker road where it leads to violence. I think both those things can be true at once. Anyway.
Yeah. Everything in life is about a balance, right? If you do anything too much, it could have negative effects. But back to the play to earn, I think the fact that users are going to be able to actually earn from their time spent, the fact that Yuga Labs is going to be integrating a lot of different gaming guilds, bringing in some of the best play to earn players in the space, this bodes very well for the future in creating a sustainable ecosystem.
What do you think is the biggest obstacle Yuga faces in the successful development of this very ambitious vision?
Yeah, I think it is the obstacles that most decentralized metaverses are going to face. So the first, as we talked about, is ease of use and ease of accessibility. For this platform to be successful, we need to onboard millions of users. It's very easy to type in an email address on Fortnite and set up an account. It's much harder to set up a MetaMask and keep track of your own seed phrase, especially if you're 13 or 14 years old. And then we also have the regulation component, right? Where it's like, do we really want 14-year-olds to be in charge of thousands and thousands of dollars worth of assets? They're going to run into some trouble there. Then there's also this idea of volatility. And we're seeing this in the existing decentralized metaverses like Degentraland and the Sandbox. Engagement is inextricably tied to the price of their coin. So if you look at those metaverse currencies post Facebook's announcement that it was transitioning to the Meta, they saw 3 to 4x gains in less than a week. What happened is that their users went up from a few thousand to a few 100,000. And now we're seeing in this market downturn, user engagement return back to previous levels. So given how volatile ApeCoin is, I think a lot of their engagement within their platform is going to rest on how well their currency is doing. Now, over time, this should stabilize. If they have millions of users within the platform, and everyone's transacting, then there is going to be a less volatile like buyer, seller, we're going to see a stabilized price. But to get to that point is really, really difficult.
What about creating like gameplay balance? And so I've talked a number of times on this show, probably arguably too much, about land sales setting up a strange dynamic in which you're beholden to your landowners and to create some sort of return for them, which creates this exclusivity there. But you also want to elevate the best UGC and you want to elevate the best, the most engaged users. And to some extent, those two things are opposed to each other. You can't kind of fully please both. So they're already trying to balance that dynamic. And then within the land dynamic, as you described, there's different levels of resources on the different lands, which will go into how much you can actually build or develop or whatever, and getting those balances right so that it's not too heavily weighted towards one or the other. And like, how big of a challenge, how surmountable of a challenge do you think all that is in terms of creating something that's sustainably fun for people?
To be frank, it's very fucking difficult. So speculation leads to a negative feedback loop, like you said, where these land prices skyrocket in value, real creators get priced out, and then in order for the real creators to get involved in the ecosystem, they need to rent the land, or just landholders expect some sort of profit at the end of it. So it creates some friction between holders and the actual producers of content and also consumers. I think there are ways to avoid this. I think there are ways to create a game ecosystem where everyone can get involved with lower entry points. So if you look at Axie Infinity, what they did is you could rent out your assets for very low prices. Same thing with Decentral Games and their ICE poker ecosystem. People can play and then earn at the same time as the actual owners of those assets can earn, but it's a really difficult balance to strike.
And Axie, their most recent move on this front has been free Axie. Like, you can play for free with free Axies that aren't NFTs, so you can get a taste of the game, and the hope, of course, being that people like it and then upgrade to the Axies that they've purchased. But they've struggled on the land front. I mean, they had sort of an uprising among their landholders because they had sold land a number of years ago, and their landholders were like, what do you, like, where's our value for this? You know, like, what are you doing with this land? And they had sort of insinuated that maybe they were going to have, like, do free land for people. I think in the spirit of this UGC model, how do we get more users on there? And then the landholders are mad. So I just think you get yourself in a precarious situation like this. I think clearly I'm impressed, and everyone is impressed with what Yuga has delivered so far on this. And I've been a bit of a skeptic of theirs, but they're increasingly, you know, they're turning me around. I'm not going to deny their success so far, and they're storytellers at their core, right? Those founders are storytellers, and I think that if they can make the story good enough and compelling enough, that can also, you know, maybe paper over if they don't get certain things perfect out the gate when it comes to gameplay, and they can potentially still build a really cool social experience for a large group of people.
Absolutely. I think narrative and IP is going to drive the space forward, and we're already seeing it with the top projects. You look at Doodles, they're integrating some lore into the space Doodles. Azuki has Bobu the Bean Farmer. Apes have Apes from the Swamp. If you have a choice between going to Disneyland or Six Flags, assuming that their rides are equal, which do you choose?
Disneyland.
You choose Disneyland because they have really strong culture, great vibes. People resonate with the IP.
That's a really good point.
I think the same thing. I think the same thing is going to exist in the metaverse.
Really cool point. All right, last question here. Bear market. What's your strategy? How are you engaging in this bear market? Are you buying? Are you holding? Have you sold anything? What are you eyeing? Give us all the scoops.
I do not suggest this for anyone listening to the podcast. I recently liquidated my 401k, bought a ton of Ethereum, and now I'm going on a little bit of a shopping spree.
Not financial advice.
Certainly not financial advice. I should caveat, I am in a very fortunate situation. I grew up in a privileged environment and have some safety nets. So most people don't have that. And I really would not suggest that.
I appreciate you saying that. I think people like look at folks who like go and spend and this and that. And like, you never know somebody's, you know, family situation, otherwise situation. And, you know, and I think sometimes people don't acknowledge if they have like other assets or means or whatever. They just want to seem like they're out doing this. So, well, cool. Well, so you're on a shopping spree. I think I saw you bought a Clone X.
Yeah, I got a few clones. I was fading the ecosystem for a long time. My original thesis was that since they sold to Nike, they were going to miss out on the benefits of decentralization, which we just talked about. I don't think that's true moving forward. I think they're going to have a metaverse play in the future. I think they're going to come out with a token probably in 2023, just my speculation. And they seem to be very undervalued. They're trading lower than Azukis and Doodles right now. But with the backing of Nike, the runway that they have, the revenue they've been generating, it seems like a very sure bet to me.
And the talented team, like you got to give credit to a team that was on this so early and that clearly has a pulse on culture. Like these are founders who have had a pulse on culture since they were designing like video game skin stuff or like sneakers for video, you know, like he started designing sneakers from video game skin, whatever, right? Like there's a pulse on the culture there. So always not financial advice. I don't own any Clone X's. I don't own anything. It's the beauty of my position is like I can talk about all these projects and be like, I literally hold zero, like so few bags.
We're going to have to get you into the Doodles ecosystem.
I know, I want to be, but and I do lose my credibility of being able to be like, look, I don't even hold one. I'm just genuinely bullish on them.
Yeah. One of the reasons I'm very bullish on Doodles, and most people don't mention this, is that they have a lot more women in their community than other big blue chip projects. And you can look at Ape Fest's IRL event. They had 95% men there. It doesn't matter who you are. You don't want 100% men at a rap concert. That's just not the vibe. I really do think the culture of Doodles, just like these are the most humble people I've ever met. I mean, some of these people have 10 figures in assets and you would never be able to tell.
Yeah, I love that team. I mean, I don't know them all. I know Jordan primarily. But I know others sort of in the ecosystem, you know, and just
Jordan is what we call a floor influencer in the business.
What does that mean?
So it's like, you know, you have your floor NFTs, which are the lowest valued. Yeah. He's a floor influencer, a floor Twitter personality. It is the best insult in the Web3 space right now.
I'm not cool enough to fully understand the conversation we just had, but I'm happy to playfully insult Jordan at any point because I don't know, because he's fantastic and that's a sign of love. Cool. All right. Well, Degentraland, I so appreciate you. Thank you for hopping on. So much insight on so many things, and we'll be cheering you on. I'm sure we'll have you on again someday to just shoot the shit. Maybe we'll have you on for a recap episode, just talk about whatever the news of the day is, because you got hot takes up and down, which I love. And with that, enjoy your weekend. This will drop on a Wednesday, but enjoy the weekend. That'll come from here.
Thank you so much, Carly. It was a pleasure. Would love to be back on.
Thank you so much for watching this episode of Overpriced JPEGs. If you liked this conversation, if you liked this episode, please go ahead and hit subscribe. It helps me out, it helps the show out, and it means you will get alerts and updates when we post new content. Thanks again.